Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 18th of January. I'm Phil Carroll.
I'm Kevin Hornsby.
How's your week been, Kev?
It's been an interesting week. The markets is buzzing. I've just been driving a quad around the pyramids with some people who are visiting us, so that was good fun.
How was that? You managed to not flip it?
No, the guy was actually sitting on the front of mine quite a bit because he thought I was a psycho, so he wanted to slow me down.
Good on you. Oh, my back's done in, so I'm a little bit. I might sense that I'm sort of like smacked up on ibuprofen and on the diazepam because my back's done in. So a bit of travelling this week. Been down to Spain, as you know, with the Nichols boys, and obviously we talked to John on the couple of podcasts ago about launching something with them. But yeah. Weather was brilliant. I mean, Thursday was great, but as I left Friday morning, it started raining. And I thought, I'm heading back to the UK for some sunny weather, which was, I don't think I've ever said that before.
No, absolutely. No, the weather's been gorgeous here as well. To be honest, it's been really nice. It's been cold. It's cold at night, but beautiful and sunny, and it was really nice. So yeah, entertaining stuff.
Now, let's have a look at some of the news stories that have dominated the headlines this week, and we'll keep it nice and sweet because we've got a few guests to get through this week. But Donald Trump sharply escalating rhetoric over Greenland as well. We talked about that last week, warning that the US may impose tariffs on countries that don't go along with his push for American control of the territory, which again described as essential for US national security.
Yeah, well, he's already said, hasn't he? 10% on Denmark, 10% on the UK. And 10% on anyone who doesn't agree with me.
Honestly, I mean, it just keeps going on and on, doesn't it, there? Obviously, we saw a bipartisan delegation of US politicians travelling to Copenhagen to reassure the Danish and Greenlandic leaders that Trump's threats do not reflect wider congressional sentiment. And despite diplomatic efforts to cool tensions, Trump's envoy insists a deal over Greenland is still possible, underlining growing concern in Europe that the issue is becoming a serious geopolitical flashpoint rather than rhetorical noise. Obviously, in the Middle East as well, tempers flaring in Iran temporarily closing its airspace after heightened tensions, causing flight disruptions, and the US imposed fresh sanctions on Iranian officials, escalating the diplomatic standoff over nuclear and regional issues. So I don't know what's going to happen. I mean, there's been a lot in the Western press about the Iran situation. Obviously, we don't know how delayed the videos that we're seeing coming through social media from Iran and Tehran, you know, as obviously unfortunately the death toll seems to rise. Do you think that they will topple the Shah and things over there? Do you think there's going to be like what do they call it, the Arab Spring there, a bit like we saw in Libya back in the day and Tunisia?
Yeah, and Egypt. Don't know, to be honest. I think Egypt, or not Egypt, I think the US was ready to attack, I think.
Yeah.
But then pull back. They were talking about that they were going to hang a group of people, weren't they? Like 1,000 people.
Yeah.
And then they didn't. I don't know. It's an impossible. Just like Greenland. I mean, you really don't know how much of it is saber rattling and how much is actually reality. You know, the market's reacting as I suspect, which is basically that it doesn't trust the US dollar, it doesn't trust the US, and the US are fighting, like they're coming out fighting on them to save their currency, to save their situation. So it's and we see that big style in the silver market. I mean, look what's happened. The silver market's all over the place. We're also talking about $120 silver, and I rang my silver dealer this week to see what the price of silver was. Sorry, sir, there isn't any.
Yeah.
So that's the first time in Egypt now. No, sorry, we haven't got any for sale. The stuff I ordered a few weeks ago is supposedly coming in the next week to 2 weeks. I hope it comes. I think it will, but everywhere there isn't any silver. No. I'm actually flying down to Cape Town for the Indaba this year, and I went on to one of the bullion shops in South Africa. They did actually have coins. They had Britannias, but have a guess how much they were.
Well, I've seen a few. I mean, I'll guess in dollars, $140 or $150 for the.
Yeah, they were $131, I think it was.
Yeah, well, the US Mint has doubled the Silver Eagle prices from $91 to $173 now for the coins.
You
And it's
serious?
also, yeah, and
Wow.
it's also, the US Mint has also halted silver sales this week to reprice Silver Eagle coins. So those Silver Eagles are the ones that, they're like the Britannias, the Eagles, and then the Canadian Maple Leafs. They're the three sort of like top coins that everybody
Yeah.
collects, that they've got the real value. So an 82% now hike from $95 to 173. And
Whoa.
the backdated uncirculated Silver Eagles have been hiked 86% from $91 to 169. So there you go. That was the latest news I saw only a few hours ago as of Saturday. So yeah, and then the final bit of news, a bit closer to home, another U-turn. I think the Labour government are going to have to take some sort of sickness pills if they do any more U-turns. But Starmer has reversed plans for mandatory digital IDs instead from 2029. Digital IDs will be optional, with traditional forms like e-passports remaining valid, aiming to ease public concerns on privacy. So I think I wasn't expecting the U-turn on this one, because I thought it was going to be almost like Big Brother's watching, but I think it's a good thing in terms of control and things. We've talked about it in the past, haven't we? How they had control over absolutely everything.
Yeah, I mean, I don't think it's a complete U-turn, to be honest. It's just saying it's not mandatory, but they're going to find a way where you have to have it. Otherwise,
Yeah.
you're not going to get situation,
Yeah.
I mean, I've had to apply this week for my ESTA, is it? That when you
Yeah.
go into the US. And I remember when we applied for it 3 years ago, I think it was, because my other one ran out. And it was $15. Have a guess how much it is now?
50.
42 or just 40, just over $40.
Yeah.
And it's only 2 years now instead of 3.
Wow. Have you been approved on it? Because I'm not being. Let's just say I know a few people who haven't. Certainly that I'm probably more people who are in the, let's say, comedian space, who've been scathing of Trump, and they've actually had them revoked and
Yeah, no, we got approved, me and the 2 kids. Yeah.
Good.
So
Okay.
yeah, I don't think
Well,
we've said anything particularly bad about Trump. So
no. So let's move on to our first guest this week. We're joined by Scott Ellam, CEO of Connecting Excellence, an executive recruitment company with a unique twist. They combine talent placement across global growth sectors with a strategic Bitcoin treasury approach. So welcome to the podcast, Scott.
Hi, Phil. Thanks for having me. Good to be here.
Absolutely, yeah. It's the first time on, so let's get down to the nitty gritty.
This is the Northern Lads podcast.
brought to you by Gravy. So it's not sponsored by Bisto, by the way. But yeah, let's get to the nitty gritty of it then, Scott. I mean, so the core business, let's ground it. But before we get into the Bitcoin side, let's start with the foundations. Connecting Excellence is first and foremost an executive recruitment business. Can you explain what sectors you recruit in, the types of senior roles that you place, and how that recruitment activity actually turns into revenues and cash flow for the group?
Yes, of course. So we've got the XCE Connecting Excellence Group. Our flagship operating business is called Spencer Riley. So that's recognised by quite a lot of businesses around the world for making placements at a senior and executive level. So if you can imagine, that might be CEOs, that might be managing directors, that's director level, regional director type placements, vice presidents of sales, vice presidents of operations, right the way down to your very experienced non-managerial roles as well, the types of positions that might be revenue generating positions or business critical operations positions. So they're the types of roles that we work on. We work across a number of different industries. We work across professional services. We work across business advisory. We work across logistics, life sciences, construction and engineering. And I suppose the basics of a business model of an executive recruitment company, we're either working on behalf of a client, looking to find somebody who is experienced in the role that they're looking to fill, and also motivated to join the business. So it's a very proactive, I think the term people would use would be a headhunting business. And we also work confidentially the other way around. So if we've been working with a managing director for a few years and then they decide that they're interested in making a move, they might work with us confidentially, and we have conversations with other clients just to see what might be of interest to them and a mutual benefit to the client. So typically, if we place somebody in a role, fee levels will range from £100,000 down to £50,000, £20,000, £15,000 at the low end. And the business, we started 2014, I started Spencer Riley. We grew the business and we moved to Leeds, which is quite and this might sound odd to people who are not in the industry, but Leeds is actually an international hub for executive recruitment. So from 2018 to today, we've done more and more work overseas. And at the moment, we do 70% of our revenue internationally. So from the USA, from Europe, from the Middle East, 30% is in the UK. And Leeds in itself as a city has, I think, certainly more than 35 international recruitment companies. So if we're speaking to a client in North Carolina, and this has happened recently, this is why I'm using this example, speaking to a client in North Carolina about a senior level appointment, and it's a new client, and we're proposing this is how we'll run the search for the East Coast regional director. That client has said to us, okay, we're speaking to one of the firm on the comparisons, so get the proposal through, and the other firm's based in Leeds. So it's just one of them places where the talent has meant that there's a number of different businesses in that area. So that's the operating core business. And names of clients we work with: PwC, Deloitte, Ernst & Young, albeit none of those in the UK, or Middle East, Luxembourg, Ireland, USA. We work with business and consultants that you'd recognize from around the world, but we also work with UPS Logistics. We work with businesses over in civil engineering that you'll recognize, and that ranges from small to medium enterprises, sizable private businesses, right through to multi-billion dollar or pound PLCs. So I think that gives you a bit of a summary of what we do, but it's an operating business that networks with people and generates revenue. And it's quite, if you can imagine, each individual at their desk, when I name all of those industries, you'll have specialists in their specific industry, and that's what they focus on. So the person in civil engineering won't be doing a professional services role in the future. They focus on their niche. That's their area, and they own that, which means it's a platform to scale the business. So the way in which you scale an executive recruitment company like that is attracting talent to join the business who have an established network in their industry. They join the business, and what you're looking for from a new employee, if you like, from an experienced recruitment consultant, is to directly add 300,000, 500,000, 700,000 pounds worth of revenue per annum. They tend to work out at about 50% margin on somebody like that coming into a business, and those margins get better I suppose the more numbers you have within a company. But I would say where it's different to a lot of businesses from that point of view is it's also protected to the downside, in that most executive recruiters have a modest basic salary and earn dependent on the revenue that they generate for the business that they work for. So I think it's quite an ideal setup for the other aspects of the business that you discussed there, Phil. And
absolutely,
a good
and would
platform
you say
to
you
grow.
do? Would you say you do sort of 50% of your work in the UK and Europe, and then the rest overseas? You know, the Middle East and in Asia. Well, what's your demographic?
It's 30% is in the UK. I'm ballpark figures here, but around about 30% in the USA. Around about 30% is Europe and the Middle East, and the remaining amount is rest of the world. So if we've got a client who's based, we just last week we placed a UK managing director for a $1.5 billion integrated services firm who are based in the USA. We have a relationship with the CEO in the USA, and that's where we usually make our placements with them. They just happen to make an acquisition in the UK and need a UK managing director to take over that acquisition. So if a client like that says, we've made an acquisition in Southeast Asia or Australia, can you find us a managing director for the region? Then we would say yes. And the consultant who has accepted that role from their client would simply work the hours that they need to fill that position.
Very good. Yeah, so let's move on to the Bitcoin treasury strategy side of things. You've obviously taken a very deliberate decision to hold Bitcoin at the corporate level, which I guess is pretty rare or even unique for a UK listed recruitment company. What's the thinking behind that strategy, and how many Bitcoin do you currently hold, and why do you believe Bitcoin strengthens the long-term balance sheet rather than distracting from the core business?
Yeah, I'll answer that the opposite way around, Phil. So why do I think it strengthens the balance sheet would be the first thing to answer before I tell you why we've bought Bitcoin. 2016, 2017, I discovered Bitcoin personally, and I am very much focused on Bitcoin only. And the reasons for that being, there's 21 million of them, hard capped. You can send it anywhere in the world and it can't be confiscated. These sort of fundamentals to it attracted me to it personally. So I'm going on that journey myself for 4 years, and you're looking into, okay, you've got 1944 Bretton Woods. If we're looking at recent history, gold exchange standard, life seems to be pretty good for people up until we get to 1971. Nixon shock, removal of the gold standard. Okay, now assets are outpacing the asset inflation is outpacing wage inflation. And inflation is slowly over that period of time eroding wealth for people who are earning wages and saving cash. So that's where I'm coming at it from that angle of them 4 years. And then we get to 2020 and we're looking at absolute cataclysmic economic shock all of a sudden, where every business is told to stop. And it was at that point where every president and prime minister around the world sort of sat there and said, okay, in order to delay an economic shock and prevent a Lehman Brothers style collapse, what we're going to do is we're going to print more money and we're going to give it to people and we're going to give it to businesses. And it was at that moment where I thought, okay, we're in for a pretty high amount of inflation over the next decade and probably for the long term. And over those years, I've been building a cash reserve in the business. So the business has been profitable for 10 years. Now we've had the revenue stop overnight, but I've been building a cash reserve to protect the business. So what I was thinking there was, how do we protect the cash reserve over the next decade? So that over the next decade, the cash reserve or the balance sheet is actually turned into an asset for the business. It's not a business that holds large amounts of capital equipment. It's not a business that needs to own property or have multiple offices. So how do we protect the cash on the balance sheet? And I decided at that time that I was going to build a Bitcoin balance sheet over the long term. And if you can imagine, 2021, the price was at £51,000 and it slowly drew down to, or quite quickly probably, especially if you owned one, drew down to £16,000. And throughout that entire period, because I'd had 4 years individually dealing with this asset as a long-term store of value, I had a high enough conviction to continue buying all the way down to 16,000 and all the way across and all the way back up. And over that 4-year period, that resulted in the business holding just under 10 Bitcoin before we IPO'd at an average purchase price of 37,500. So we'd done well with our balance sheet, and the plan, if you like, and the commitment had proven to be true regardless of the volatility in between. So we IPO'd with an existing 4-year Bitcoin balance sheet strategy. And at IPO, we've raised, we were significantly oversubscribed and several times oversubscribed on our retail offer. We raised 3.3 million. And since then, we've made a number of Bitcoin purchases and we've increased our holdings to 41.36 Bitcoin at an average cost of $80,000. So 346,000% Bitcoin yield, if you like, on the percentage increase against shares. And for the future, we plan to increase our Bitcoin holdings, and we have chosen to use our public strategy to drive operational revenue growth as well. So the public status allows us to raise capital and increase Bitcoin per share and exposure to Bitcoin from a balance sheet perspective and for our investors. And it allows us to do more innovative financial products like the bonds that we've recently released. But what it really allows the operating business to do is then use that Bitcoin balance sheet to attract talent to the operating business. And as I mentioned earlier, the talent joining the operating business is how you drive revenue and profit growth in the operating business.
Yeah.
And it's not just talent.
Scott, let me there in terms of the operating business and just go back to that operating business. Spencer, as you said, has been going for a period of time. How many recruiters do you actually have as we speak at Spencer Riley?
So there's 13 employees at Spencer Riley. And the vast majority of those 360-degree it's their clients, it's their candidates, they drive the revenue through. There's one or two who will work on supporting our larger clients to do more volume-based placements. And then we have the board for XCE Connecting Excellence Group as well. So we plan to grow that team.
So from that, over the last few years, looking at 24, 25 in terms of revenue, what was the breakdown of revenue that you produced and the profit produced from that business?
Yeah, so since 2021, if you like, when we established the balance sheet strategy, we've had a 30% plus compound revenue growth to the operating business. Now, that's starting from a year that was very different to others, but we came to IPO with a 1.5 million turnover and a £700,000 gross profit. And then given we'd had IPO costs involved in that year, I think you would say it worked out around about $250,000 net at the end of it. But what I would say, Kevin, is before we get to gross profit, that is the basic salaries and the commissions for our consultants. So after that £700,000, you've got some rental costs and you've got software costs and you've got general administrative costs. So we intend to grow the revenue, by attracting people who generate more revenue. And in Leeds itself, we've identified 100 consultants billing £300,000 plus, we estimate, who are working with our competition, and they'll be on their moderate basics and high commissions. And we intend to be able to offer them the same kind of salaries, the same kind of commissions, but add in the public limited share options based on performance as well. So we see a really scalable platform to attract talent and grow the business going forward.
So unlike most of the companies that obviously aren't listed, they're basically offering salaries and commissions. And ultimately, as we know, in just the same way as maybe finance is the same situation. When you have one-to-one relationships with your clients walk with you in 9 times out of 10. So the way to scale a business is that you have golden handcuffs. So what is CE's golden handcuff as you build towards this 100 consultants?
Yeah, if you're looking at the private executive recruitment companies, tend to be between 1 million and 50 million pound turnover. And our strategy to go public and use the strength of the balance sheet to attract people. The strategy is similar basic salary with us. Yes, you're not going to be getting less by joining XCE Connecting Excellence Group. From a commission scheme, if somebody's billing, let's take somebody billing £300,000, like a really good, steady recruiter who knows what they're doing and is experienced. If they're billing £300,000, they tend to be on a basic salary between 40 and 50,000, and we tend to earn between 110 and 130,000 overall. So it's about attracting those types of individuals who at the moment, pretty much every business in our industry is offering a similar salary, it's offering a similar commission scheme. And to separate ourselves, we can offer the salary, we can offer the commission scheme, but we can add on share options as well based on performance. So if you've got a history of billing 300,000 or 500,000 or 700,000 pounds per annum, then you can join the business and receive some share options that will only vest based on you generating that revenue, generating that profit for the business over the first year, the second year, the third year, the fourth, the fifth. So it's not just about retention and motivation, it's about attraction as well. And our existing staff have got the motivation, they've got the retention, but about a future staff, it's about building a real attraction model that just draws revenue into the group. And that compounds as well, because I'm speaking to people at the moment, and we've had some phenomenal conversations in the first few weeks with experienced people. And the experienced people know other good experienced people, and they come from businesses where they know other experienced good people. So in our industry, it is people driven. I think when you said there about it's for contacts, if there's very few M&A activity between the competitors in our industry, because if I'm seen walking into a competitor's office to discuss acquiring the business, then the chances are the highest billing members of staff will want a conversation with me to join our business before anything happens. So your revenue can walk out the door, which is why you want to make sure you are building an environment that's scalable and good to be in long term for the consultants.
Yeah, and everybody benefits from the upscale, obviously, then. And ultimately, that's what the golden handcuffs are all about. So you have a treasury within the company. That's 41 Bitcoin. What value of that then in British pound?
It can fluctuate. So at the moment, you're looking at, let's say, 68,000 right now. So in British pounds, you're looking at just under 3 million, 2.81 million pounds valuation on that.
Just under 3 million or 3 million pounds worth of Bitcoin. Now, you have then gone into the market on another level of the business, which is obviously your part of the business, and you have put in the market a Bitcoin bond. Okay, everybody's going, we don't want a Bitcoin bond because that means you could lose. Okay, but this is not how your Bitcoin bond has been set up. So you explain it to me, and then I will try and explain like a 5-year-old child as a standard.
Yeah, I mean, to make it really simple, this is geared towards institutions and people who are holding a significant amount of Bitcoin. And the basic premise is I would like to say no risk, but I think I'd be told to say very little risk to the business and very little risk to the bondholder and upside to the shareholders. And if we as a business, I mean, we've issued and signed the first one. So it's a 2026 convertible bond program. First one signed, and that's 10 Bitcoin. So we borrow the Bitcoin and we receive it in Bitcoin and we hold the Bitcoin and we charge a 30% premium for the bonds. And when our share price outperforms Bitcoin, we have a soft call then to convert the bonds into shares rather than send back the Bitcoin. So it adds the 10 Bitcoin to our balance sheet. And it only converts when it increases Bitcoin per share for our shareholders. So they're denominated and settled in Bitcoin, and they are 0% interest, 12-month maturity, 130% premium, soft call at 120% of the conversion price. And basically, they're there to be able to help us scale the Bitcoin balance sheet in 2026 and drive increases in Bitcoin per share for our investors. And the stronger our balance sheet is, the more Bitcoin we have on our balance sheet that is pristine, if you like, and unencumbered, the more attractive we become to talent coming in to generate more revenue and companies to join the group to generate more revenue. And that's where we see the balance sheet combining with operational growth.
Okay, so I'm going to try and explain that back to you as a 5-year-old. Okay, so the scenario is the bond 10 Bitcoin until the strike period. So right now, those 10 that you've signed are not on your balance sheet.
They're held by the business, but the 10 Bitcoin that are held by the business are owed back by the business as well.
Okay, so is this 10
and we want them to convert into shares.
10 Bitcoin included in the 41 as we?
No, it's not. No.
So the bond it was issued when the share price was like around 2.25 pence. Is that right, Scott?
Yeah, correct.
Okay, correct. So the investor or investors lend 10 Bitcoin. Now that investor can convert into shares only if the share price rises to around 2.93 pence, which is about 130% or 30% above the original price that the bond was issued at. Okay, so if that happens, the investor can choose to convert the loan into shares. But for the company to force the conversion, the share price has to go about 20% higher than that, so around the 3.51 pence for at least 10 consecutive days. So when that conversion happens, the investor, as Kev just said, gets company shares at the agreed price. But if the conversion doesn't happen, then the investor gets almost all of their Bitcoin back at the end, minus a small fee. I think it's about 2% or something along those lines.
Yeah, it is 2%.
And obviously the company will benefit by using that Bitcoin for their strategy, because you obviously, you add them to the balance sheet, and it's only if if the conversion doesn't happen, then you'll retain 2% of that. So it seems like a good deal, right?
Yeah, it's one of them deals that's like a win-win, no loss. So if you've got thousands of Bitcoin in your institution, and we've got strategic investors, one of which is named on there. I mean, we have other strategic investors who are holding Bitcoin. One of the ones named on that, Adam Back, first person to receive an email from Satoshi Nakamoto, founder of Blockstream, put satellites into space, done all sorts of great things, Adam, and he's an incredible pioneer in the space. Adam's preparing a NASDAQ listing for a SPAC called BSTR. Now, Adam and friends put 25,000 Bitcoin into that, and I think it's now holding 35,000 Bitcoin. But if you can imagine institutions around the world who are holding Bitcoin, one of the biggest concerns for traditional investors on Bitcoin, we're trying to address those. And one of them is that it doesn't provide a cash flow. And one of them is that you can't really do much with it. So these bonds allow institutions that are holding significant amounts of Bitcoin to give us the Bitcoin, take the bond, and have the opportunity for upside when our share price outperforms Bitcoin. They've outperformed Bitcoin and they can take the shares. But on the downside, if nothing happens to the Bitcoin price and nothing happens to the share price, then they know in 12 months' time, their downside is limited to 2%. So it's appealing to the bondholders, benefits for shareholders, and allows the company to scale its Bitcoin balance sheet as well. So those people who are participating in it in this first round are all investors and shareholders in the business. Yeah. And they're all people who are holding Bitcoin. So they understand and they appreciate why we're charging them a 30% premium, and they're benefiting from that themselves as shareholders.
Yeah.
And we all want the conversion to happen into shares, which is why this is the first time that a Bitcoin denominated bond has ever had a Bitcoin differentiator. So if you can imagine, the conversion price actually tracks the increases and decreases in the Bitcoin price as well to make sure that it's truly Bitcoin denominated.
Okay.
And if we get to the end of that 12 months, the Bitcoin price hasn't moved and the share price hasn't moved, we have the opportunity, if we're above a 1x multiple of net asset value, to refix and make it attractive for those guys to convert into shares rather than redeeming Bitcoin.
Yeah.
So the reason these have been designed so optimally is because we have A, people like Adam back as key strategic investors, but B, we have board advisor Richard Byworth, who used to run the largest, I think it's the world's largest convertible bond desk at Nomura, running their convertible bonds, futures, derivatives. And we have Vijay Selvam, who's ex-Goldman Sachs, as a non-exec director who's working as chief counsel at one of the largest digital asset exchanges on the NASDAQ. So we've got a really strong team of experienced capital markets experts, and we're designing every aspect of a business to be right and scalable for the long term as well. And this is part of that strategy.
Yeah. So you've done you've got the commitment for the first 10, as we just said, 10 Bitcoin. What are the next plans? Are you going to then maybe double it and then add another and go 10, 20, 30, 40? Is that the plan? I mean, what's...
Yeah, the plan is to make sure that we're utilizing every lever that we have in the most efficient manner and fit to the size of the business and the market at the time. So if they converted and you're saying you could do a 20 Bitcoin one, yes. And if that then converts, you could do a 40 Bitcoin one. And if that then converts, you could do larger and larger and larger until you get into the stage where you've got the balance sheet with 500 or 1,000 or more Bitcoin on it. That we would do that in the environment that is most beneficial to shareholders. So I can't talk about future plans or conversations we've had with investors, but what I can say is every investor in the bond has the right to participate in the next follow-on tranche. And we will speak to other institutional investors who maybe couldn't have the conversation with us before we became public about these bonds, and we will welcome other participants in it when it's the right capital. By the right capital, I mean we're doing this for the long term and looking to disrupt the executive recruitment industry with an innovative balance sheet. And we've started at a size that is right for the business, the operating business right now. And we want to grow and take investors on the journey with us, not ask them to meet us at the destination. So it wouldn't, in my opinion, at the start of this process, it wasn't about raising as much money as we could. It was about raising the optimal amount to start, allow investors to join the journey, and then take them with us. Adam's obviously gone the other way with his own ventures, with 35,000 Bitcoin going on to a NASDAQ listing. That's starting at quite a sizable amount. But we the business is a people business and a networking business. Got 100,000 senior, mid, and executive level connections throughout the executive recruitment company around the world. We want to build out a network with investors as well and make sure that we are demonstrating and championing the use of your balance sheet as an innovative tool to grow traditional operating businesses. And we're speaking to quite a few traditional operating businesses about how they can, if you like, benefit from the strategy we're doing by either considering it themselves or joining the group if they're an executive recruitment firm that has synergies with us.
Very good. So the point of view of right now, this initial will be at what share price?
When it was signed, 3.5 pence. That will vary slightly dependent on the Bitcoin price. So if I gave you an example, it's far easier to give you an example by rounding the numbers up, by the way, guys. But if the issue date Bitcoin price was £100,000 instead of the 65,981 or whatever it was at the time, if we just say hypothetically, if the Bitcoin price was £100,000 and the XCE Connecting Excellence share price was £1, then the conversion price would have been £1.30. And it's a 0.1 Bitcoin bond. So each bond is 0.1. That would have been £10,000 equivalent. If the Bitcoin price rises 50% in that scenario to £150,000, then the conversion price adjusts to £1.95. And if the Bitcoin price fell by 50% to £50,000 in that environment, then the conversion price adjusts down to 65 pence. So it always converts for the exact same amount of shares. And that's where this bond's very different from other Bitcoin denominated bonds. So 3.5 pence is not far off, Kevin, but it will fluctuate slightly depending on whether the Bitcoin price exponentially goes up or stays where it is now at the moment.
And the bond will enact if the share price hits that for how long? Is it 1 day? Closing?
It's a 10-day VWAP.
Okay, so a 10-day VWAP on your
yeah.
It will go.
Soft call. Yeah, that's the soft call area.
So there's a soft call, and what's the hard call then?
The hard call is the 12-month maturity. The soft call, we would only be giving our investors a call on the soft call if they're making 20%. So our share price has outperformed Bitcoin. We're calling the bondholders and saying, we're calling the bonds. Do you want to make 20% profit or would you like your Bitcoin back? So in that scenario, bondholders are highly likely to take the shares and benefit from the 20% upside. The hard call at the 12-month mark, we can review at the 12 months if it's not in a position where the soft call conversion trigger's been hit. And it's only at that point where we could decide as a company, if we choose to, we could refix the conversion price to make the conversion to shares more attractive, but only if we are at a higher than 1 MNAV and it's beneficial to our shareholders and increases Bitcoin per share. And you mentioned other areas where they may convert, Kevin. They would always convert when it's increasing Bitcoin per share. But on day one, when the bondholders buy the bonds, they could convert into shares if they'd like to, but they would have just paid a 30% premium for our shares. So they're unlikely to want to convert.
Okay, but at the bottom, just to recap, at the bottom of this, you have got to produce through Spencer Riley, international executive recruitment that is effectively going to be growing and increasing revenues and compounded by bringing talent into your business.
Yeah. So if you took it on its simple model, the last 4 years as a private business, we've grown revenues, grown profit, and with the surplus cash, we've held it on our balance sheet in an asset that's appreciating over the long term. And we've got the Bitcoin treasury side of a business to drive growth in the balance sheet and attract capital and attract people who want to participate in the convertible bond program. But the operating business is a business that's placing with some of the world's most recognized companies and generating fees for director level placements. I mean, if I take last week, I put an announcement out, and I don't mean an official announcement. This is part and parcel of our core business. We placed a US sales director with an AI supply chain intelligence company. We placed a UK managing director with the US-based £1 billion integrated services business. And we placed a US-based director with a global leading consulting firm, of which you'd recognise. So the operating business, the staff who are in that business now are motivated to perform, because at the end of the year, that dictates how many share options they would have over the next year and the next year and the next year. And for people coming into the business, it's now we're beginning to start our talent attraction rollout, which is bringing new people into a business who have a proven history of generating revenue and profit, which allows the business to buy more Bitcoin. And the more profit and the more cash flows we can attract to the company, the more Bitcoin we can buy organically as well. And then from a business point of view, I saw this as a longer term. The market might take a while to understand this, but Connecting Excellence Group can bring in competitors into the group, provided they are no debt, they are profitable businesses, cash flowing businesses. If they want to join the group, we can turn their cash reserves into Bitcoin on day one, and we can allow the owners of those businesses the opportunity to have a 3, 5, 7 year earnout in equity based on the revenue and the profit that they contribute to the business and their ability to increase Bitcoin per share for our investors as well. So it's kind of a flywheel of the more revenue we generate, the stronger our balance sheet becomes, the more talent we attract and the more businesses we attract to the group. And I've had approaches from business owners who I've known throughout the years, who I know are running solid businesses, asking about that and going into detail about it and just trying to understand how we might be able to work with them either now or in the future. But I suppose the worst case scenario in them conversations is they understand that we're proactively using our balance sheet, and they might consider doing it themselves now. And in 2, 3, 4 years, they become even more attractive to the group and more synergized to the group to be able to join it. But it solves a big problem in our industry because I think, like you rightly point out, Kevin, the revenue can walk out the door. So competitors rarely buy competitors, and private equity firms rarely buy them as well, because for private equity firms to come in, my 2 latest best hires in the business, and they'll both know who they are if they listen to this, both work for a business that a private equity firm bought, and both decided that they wanted to come and join us instead a couple of months after that happened. So yeah, I'm excited about the operational growth and excited about disrupting the executive search industry, because it's a multi-billion-pound industry, and I think there's more than 30,000 privately owned recruitment companies in the UK alone.
Yeah, so there's a lot of space there for consolidation for sure. I'm sure there is. What in terms of revenue, you obviously did these figures before you listed, but you kind of 1.5 months worth of revenue in the year before you listed. What are you hoping to achieve as the years go by, as in this coming year and the next, say, 3 years ongoing?
Yeah, well, I've found out that every time I present those figures to our lawyers and our board, that as a public CEO, it's difficult to give forward-looking statements with time stamps on them as well. And I suppose what I would say is there's 35 direct competitors within a couple of mile radius of us who are also operating internationally and also have teams that work in the same manner we do, producing fees between £20,000 and £100,000 per person that we place. Would I like to see us bring businesses into the group this year? Of course, but I would prefer us to look at the 100+ consultants who work in the exact same manner as we do, generating revenue as we do, and attract as many of them to the business as possible over the next 12, 24 months. And I think the more education we put into the marketplace about what we're doing, how we're doing it, the more people join, the more results we produce, the more it becomes a self-fulfilling prophecy, if you like, from that point of view. So 10 people doing £300,000 would be a great amount of people to secure.
Yeah, no, well, you would increase your revenue from 1.5 million to 4.5 million if you achieve 10 people doing £300,000 a year. 300,000, £300,000 a year or more. So if this is the objective, then all of a sudden, you're going to be looking very cheap business with that sort of revenue, especially when you're tying people in terms of the golden handcuffs.
Yeah.
But anyway, now we're going to get down to the serious question. Because now
the serious question that we actually started the podcast with about the gravy, the bisto element of things. So go on then, Kev.
What is the Sunday roast in Scott's house?
It's about 600 yards away from the house at my favourite pub.
I like this answer already.
Yeah. What you're specifically looking for? Because I would usually go a rib of beef. A pretty fatty rib of beef as well.
We're looking for details here. We're looking what meat would you go for? Gravy? Are we talking blow your head off horseradish sauce or the cream because it's in the pub? I don't know.
It's Yorkshireman, so I'm going for the creamed element. He's not a Lancastrian like myself, so he's not going to go for the blow your head off.
Phil, I was born over in Lancashire.
He's a Lancashire man. Yorkshire.
I've wore both the Lancashire and the Yorkshire shirt.
I was going to say, I thought you were Leeds through and through. I thought you were proper Yorkshireman.
No, I've wore both the Lancashire and the Yorkshire tops on the rugby pitch, so I'm hated in both jurisdictions.
Just to let you know, Scott is an ex-rugby league player as well, so he used to play rugby league.
Yeah, not particularly well, and I think anybody I played alongside with would ask me to just curb my enthusiasm over my rugby league career. But yeah. So let me take you off the rugby league manner before I get texts off teammates. Rib of beef, lots of fat, duck fat all over roasties, loads of veg, Yorkshire pudding. And my ability to make gravy would mean that it would be granules filled with anything else that fell out the roast pan, if that's what you call it.
Very good. Do you want to go with the other question, Phil?
Yeah, I guess what's the best advice you've ever given or received?
That's a big one. I think I'd have to go with received, because I think given might not look as good from a leadership perspective. But received, I would probably say it's the simple message of back yourself. And I think that's gone through when you mention the previous sports career, but also in business as well. Set this business up 10 years ago, and it was a back yourself moment. And there's been, over that 10 years, you'll both know, there's been a lot of changes in not just the UK, global and business environments, but there's been challenges along the way, and every time I think that's the advice is back yourself and do what you believe in your gut is the right thing to do. And we get to this point now in the business, and I firmly believe that we can positively disrupt this industry, and over the next 10 years I am backing us to do that.
Self-belief is a big one. There's a lot of people who don't succeed in life because they don't have that self-belief that they can do it, and as you say, don't back themselves. Good.
That's good advice. Do you know what, you only get one chance at this and it's sad when we look at things and you don't do some things when you know you probably should have done, because the worst thing that you do is fail, and actually failure normally just to success the next time around.
Okay, well, on that note, we'll say Scott Ellam, CEO of Connecting Excellence. Thanks very much for appearing on the podcast.
Yeah, that was good from XCE. I think that's got a really good chance, actually. I think the potential there is good. But let's move on to our second guest. Okay, so welcome, Paul, to the Sunday Roast from Active Energy. How's things going for you in the new year, Paul?
Good, thank you, Kevin, and Happy New Year. Yeah, it's been an exciting last three months. Obviously, you can see by the announcements we've made, we've been busy behind the scenes, or just trying to get our 3 projects up and running and off the table so that we can produce money and show people a return.
Very good. So let's go through them one by one and give people an overview of the company, because I think that's important, especially when we're talking about all of this for £3 million market cap. So first of all, let's go to Coal Switch. I mean, ultimately, Active Energy was a different proposition before you guys came along, and literally tens of millions was spent on this particular project to produce a lower carbon alternative to coal. So tell us a little bit about the strategy and collaboration. I see that you're dealing with ICE, which I thought was a bit of a problem because obviously they're the guys trying to kill everybody in the US, but actually it's the indigenous Canadian energy company, not the ICE that we're talking about, and that's in Poland. So tell us more about how we think this could be monetized, because at the end of the day, the other company that was involved basically never got to this stage of monetizing it, and that was the problem.
Exactly. As I said to you before, I mean, rather than, it was always a case of we didn't want to flog a dead horse because of what had already been spent on it and all the disappointments, but we always left the channels open. We reached out to everyone we knew that had been involved, asked for them for their opinion on what they thought and where it was wrong and what wasn't right with it. And then interestingly, we managed to have a call with Richard Spinks, who was one of the original founders. And to say that his knowledge on coal switch and the black pellet market is massive is an understatement. He knows it inside out. More so the fact that he's got an operation in North America, nothing to do with what was before over there. And he's also in Poland, where he's on the verge of, looks like quite a good, exciting deal. So we reached out to him again and we just said, look, is there any collaboration with what we've got with Coal Switch? And he said, well, yeah, there is. So I jumped on a plane, went out and had a look around. And yeah, I mean, it's all feasible what he's got there, but it's actually something that you can see the light at the end of the tunnel with. He is willing and happy to do a collaboration with us, which we're still working on as we speak now, whereas he's got a plant that he's got ready for production. He's got an end user, but more excitingly, he's got an end user that is also producing steam, an excess of steam. So he's got all the elements there. And if we can join up on this journey with him, then that's what we are proposing to do. So, you know, it's not dead, which is just something nice to hear.
Yeah, absolutely. So do you perceive, you know, I hate people saying time frames, but what are we looking at? I mean, we're looking at, you know, within months, within years, that you know, there could be some revenue coming out of this.
Well, from this point of view, it would be if we can get an agreement in place with him, that would be within the next 2 months. And what I've seen of his program, I would say, will be ready. I would say 12 months' time, he'll be actually producing. I've met his end users there who are pushing him to get a plant up and ready and running. So there is cash flow ready there. He's got backing with the banks there. He's got backing with the government and, more importantly, with the EU as well.
Very good.
It's got all the elements there lined up, ready to go.
Yeah, so really you're sort of almost backing that into another company and they can do all the work now that you've got this coal switch, and then you're going to take a proportion of whatever it can make.
Correct. Yes, that's right. Yeah,
that's the general
all,
gist.
All we're interested in is doing a JV where we can be tied in, where AEG's then just going to get a revenue share.
Yeah, fantastic. Okay, that would be brilliant. I mean, basically, that's sort of Phoenix from the flames almost. You know,
it could be, yeah.
Yeah, very good. Okay, so let's move on to the next step, which is rooftop solar. We've got Cambridge City Football Club signed up. I suppose the question I've posed myself is that looks like a good deal. How does that affect you in terms of like the price of silver and the fact that solar panels are probably going to be more expensive and all of that sort of, or does have no impact on your situation whatsoever?
No, that doesn't have any impact. I mean, within the market, you know, everyone's still keen. You've obviously got the government pushing for solar power. There are still grants available. As we said, this was always the slow burner, the cash generative one that is just there as a steady bread and butter. This will be our first one that we're going to get built out. And we've got quite a lot in the pipeline to go on. But again, we wanted to get one done through it first, up and running, show that done, and then roll them forward again before we spend any more money on any more. So again, we're just going slow and easy on anything like that.
And the best project at Fawn Castle, South Wales, just tell people a little bit about that. I know it's not a big part of it as well, but
that's more that's still more of a planning play, where Fawn Castle, he's got a great site there. He's got, again, all the elements, and I just wanted to be there so that we've got a tie-in on the future with that. But that one there is a big one on the battery plant, basically, because of their position right next to the main electricity generator for South Wales. That's been rebuilt, a new one, and he's basically done under the lines, basically. So he's in the right position with the land. So yeah, it could be something good, and that's just one for the future again.
Yeah, is that anywhere near any wind power generation or anything that can be used for storage in that situation or not?
Well, it can be, because you're right on the coast there. I mean, literally, you can see from the actual hand, you're looking out to the sea. But more importantly, it is going to be the fact of that you're in a position where any solar, etc., you can fund straight back into the grid, which is what stops a lot of these PPA plays at the moment.
Okay, so the parts we've talked about now are in effect not all the old part, but they're not the major part of the business. The major part of the business is we've gone to the UAE. We've looked at power generation in general, and we wanted to allow power generation to come in and have these sites for AI, crypto mining, etc., etc. So tell us about the first scenario that 60%'s already been sold, 40% is going to be sold on completion, which should be mid-February. Yeah, tell us more.
Yeah, so obviously I noticed that people say, oh, it's a delay. We're looking at a 2-3 week delay. That was caused, Kevin, basically due to the landowner agreeing in principle that we were just going to have a chainmail fence around the site. He then asked for it to be block built. Again, if it was in the UK, you would be looking at months of planning and going backwards and forwards with the planners. Over there, it was straightforward. Permit within 2 weeks, 3-4 weeks in total was the delay. That was it. So we've done that to pacify him, because he's someone that we're looking at working forward with the next site as well. So, you just want to keep the people happy with what they want. Very small delay. But yeah, I mean, at the end of the day, we could be doing more sales now, but we wanted to wait until it was open before we carried on and opened up the sales book on it. We're still looking at the same revenue scheme. And I mean, it is big, and it's just done, it's great. And then obviously with the change in the crypto price as well, slowly, it's broken the 92 barrier again. So hopefully, that's going up. So a lot more interest back in Bitcoin again.
Yeah, I think the cryptos is going to have a good 2026, to be honest, from this level anyway. I mean, there's all sorts of stuff going on, I think, and people's ability to what's the right word, have confidence in their fiat currency is dipping drastically. We've seen that obviously.
Exactly, yeah. But in
gold, silver, and all of those things.
Well, that brings us on to it. We've been contacted by a few institutions where they're asking us about when we're going to get this one up and running, what are the figures like, and we made it quite clear that we're not interested in doing some equity with massive liquidations, and we're pushing everyone that we want debt to be able to roll forward with this, which they're saying, well, once you've got one and you've proven it, and you've got a pipeline of others that you can do, then it's a no-brainer, especially with funding out there where we are in the UAE. So it's looking really, really good.
Yeah, and I mean, just so people understand, you anticipate, or you said in the RNS, that there'll be 3.8 million of revenue on this first one, with 50% margin, so that would be 1.9 million pound more. It's $1 million, sorry.
Yeah, dollars, yeah.
So $3.8 million and $1.9 million of revenue, and then any spare capacity, you're going to be able to host crypto mining as well, if there is any spare capacity. Did you leave the 40% back on purpose because you're going to be able to get a better margin once it's up and running? What was the thinking behind that?
2 reasons. We closed the sales on it because obviously the drop on the Bitcoin, so we didn't want to be there chasing people where they're not sure where the price was going at the time. Secondly, we were also working behind the scenes, as you saw from the RNS last year, where we were waiting for AIM to clear us to be able to mine our own Bitcoin for our own treasury, which we thought was a big play. So if you've got any spare capacity, because of the modular units we've got, we can basically, use both the power and any spare mines to produce Bitcoins for ourselves, which again, all these all the institutions and the big players out there are all now pricking their ears up and listening to what we've got to say. They just want to see the concept up and running.
Yeah, no, it looks good. Okay, so I can see that you've got an electrical utility play, which is obviously going to be beneficial, that you're going to be able to leverage several times in different ways. So the next question I pose to you is that This is the UAE, which is by no means the biggest country in the Middle East. So where and how do you see that they could expand? Could this expand to, Qatar, Saudi Arabia, Egypt even? Where could it go?
Well, interestingly, Kevin, yes, we have been approached by other countries. So that is something that we've got behind the scenes we're working on at the moment, which I can't really go into any more detail at the moment. But yeah, it's there. They are all looking at what we're doing and realising what we're able to achieve. And when you think about all these other countries again, where their solar power alone, what they've got is just going to waste. So for us to drop our modular units in, it's easy to make money.
Yeah, it's a no-brainer for them as well, because they want to use this energy. And they're moving that way anyway. They know, all of these Middle Eastern countries know they've got to move away from oil as well.
Yeah,
over time. It's not an overnight situation, but that is. So, I mean, we're looking at a market capitalization of £3 million for what we've discussed. How do you feel about that?
It's quite frustrating to see that the share price isn't reflecting our true value, without a doubt. But what we have seen is every time we've got some good news going out there, and obviously we've got some interest in the shares being bought. We've also seen the overhang from the coal switch days, the pre-our takeover, as it were, where they just want to get some money back on their investment that they've put in for years and years. A lot of these poor people have been in for 50p's, a pounds, £1.50s, and they're probably just fed up and they're just glad to get the money back. But again, it is funny when you look at the way some people react to a share price, and you have to remind them again that last summer the shares were suspended. They had no value basically until we came in and we managed to pump money in, and we've got to where we are. And we are trying to build a sustainable business with a really good cash flow, and that's what we're still trying to do.
Yeah, absolutely. I think it's a free hit to the price of the warrants, to be honest, to 0.01 and above, because nobody's going to be cashing in a warrant at the warrant price. So I think a doubling of the share price to 6 million market capitalization is very comfortable and very achievable. And you are worth that based on what you've got. If you've got revenues of $1.9 million, which is 1.34 million pounds, it wouldn't be hard to say that you should have 10 times on that in a utility-based business, which would give you a market cap of over 10 million pounds.
Exactly.
So it doesn't make, and we're not trying to, ramp it up there. That's just a reality. Once that happens in February, then, your share price should reflect that. And to be honest with you, a lot of people followed this stock in the past because of Coal Switch.
Correct.
So Coal Switch was going to make an absolute fortune. If you even get a smidgen or a part of that through these ICE guys, then again, that's just going to be an incredible added bonus. So yeah, listen, we look forward to the story. I'm actually probably going to come out to Dubai, I think in March. It'd probably be during Ramadan, but so maybe we can get a tour of the first one once it's up and running. And
100% you can do that. Yeah, you can have a look and see what it's like.
Yeah, and just see what the progress is on the ground. But thanks for your time, Paul. Any last comments before we call it a day? I
just really want to be able to show the shareholders that what we've got is something that is worth investing in, and we just want to do good by them.
Yeah. And I'm one of those shareholders, quite happy to say it. Been buying on the market, and I think this is extremely undervalued. So yeah, good luck.
Thanks.
Don't let us down, Paul.
Hey, listen, I'm in it as well, remember?
Yeah, no, I know. I know at the minute, that's a good point, Ashley. Let's just cover that, because at the minute it shows you as a very small shareholder, but that isn't going to be the case longer term. Do you want to explain that?
Yeah. So basically, the way that I had to originally invest into this was by the convertible loan note. So basically, I can go up to 29.9% at any time. I've already put the cash in. My hard cash has gone into this business. From when we first looked at starting this and where we are now, I've probably got in the region of about £700,000 to £800,000 invested in AEG. I'm here for the long run as well.
Yeah, and you want that £700,000 or £800,000 to be worth 70 or 80 million, I would imagine.
Yeah, 100%. I was looking at this as my my last big pension.
Yeah, well, you'd be buying an island, not a pension.
Pension I'll be happy with, mate.
Okay, well, good luck anyway, and yeah, we look forward to seeing how all things progress over the coming weeks.
Lovely, good to speak to you, mate.
And then our final guest this week, Leon Coetzer from Jubilee Metals, which was Jubilee Platinum, but no longer, I believe. How are you doing there, Leon?
Good. Thank you, Kevin. Had a good week behind us. Our AGM was concluded on Wednesday as well. So really looking forward to this year.
Yeah, very good. So deal's concluded. You've X million in the bank, X million coming over the next few years. Tell us the future of this company.
Yeah, no, thank you, Kevin. I mean, it's a fundamental shift that finally, as of the 31st of December at 4 o'clock, we concluded the transaction. And it therefore means that we went into this new year as truly purely copper focused. Yes, we still have a EGM asset in Chate, which was actually the asset that Jubilee was founded on originally. That asset we still hold. And this year we're appointing a committee to take that project to value. But our main focus, operational focus, now shifts fully into Zambia, into our copper strategy. And as we discussed last year, we've distilled copper focus into three main drives in Zambia. We've, on the one side, we have our Rowan concentrator that attracted a lot of news. We had many challenges we had to overcome to bring that facility into operation, and we're pleased to have announced last year, and it continues to be operating at full capacity. It's meeting its targets, and its next relatively minor upgrade, which comes into operation next month, February, is simply to ensure that all of the products that this concentrator is producing, that copper is dewatered and dried to get to Sable, which is our copper refinery where we make cathode. So Rowan is operating nicely. It's a simple business. It's a business where we purchase in run-of-mine ore, we upgrade that and send that product or products to Sable refinery. At the moment, a very large portion of what Rowan is producing is actually kept at Rowan because of the capacity constraint we have in drying that concentrate to be refined at Sable, and that is the part that is commissioning next month. The next part of our business, which is we discussed last year quite a bit, is the more traditional mining all the way to cathode, copper cathode. We started the mining venture by acquiring a 400-hectare property, a Molefe mine. We brought that into operation as an open pit mine. This is very simplistic mining, very shallow mining, and that proved to be very successful. On the back of that project, we went ahead and through various agreements secured and expanded that right of 400 hectares. And today we're sitting with nearly 25,000 hectares of exploration ground surrounding this property. And this is currently being reviewed and a resource exploration program is underway. It's actually quite a nice start out of the blocks, because it's not as if we have a greenfields property that we are now commencing exploration. We in fact have an operating mine delivering ore to our refinery and making cathode. And from that extrapolation, it educated us on which properties to pursue, and that exploration program is underway. It therefore allows us to have quite this year, looking forward to this year, to have a significant expansion potential of that property. You can imagine 400 hectare mine design compared to 25,000 hectare mine design, which is large in any company's language, has a tremendous potential of it becoming a mega copper mine close to our refinery. The third part of our business, which is underway, is the large waste rock project that we had secured. This is the largest one in the country. It's 260 million tons. We had commenced and employed a third-party consulting firm to develop a resource review so that we can actually publish those results on what it is that we have secured. Our next phase on that project is the implementation of what we call our modular process units, which we developed here in South Africa as well. On our chrome business we have sold, where we upgrade that material and then sell that or partner with existing refineries to bring that to cathode. We've also alluded last year that we are in several discussions with companies to partner with us on that project. This is a very large project. 260 million tons can carry multiple modules on that large project. And we are in discussions with a number of companies. Of course, with the copper prices, that has attracted an enormous amount of interest in a project such as this, where the materials are on surface already, and we have an external consulting firm completing their resource review, which will, of course, inform the market on those outcomes and those results from that resource review. So we have a year ahead of 3 very exciting areas of our business. 2 are operational. 1 is due to come into operation while we now expand copper production. It comes at a nice time when copper prices have reacted quite nicely. So not that we have designed the timing, but it does assist to be at this operational expansion phase at the time when the copper prices are very supportive.
Yeah, I was going to ask that question. When you made this decision, which wasn't yesterday, obviously, what were the copper prices? Because we're talking like 13,000 to 13,300 now. But what were they when you made the decisions?
Yeah, it's interesting. We actually, from the very start, when we started this company back in 2014, and we commissioned our first operation in South Africa, we already, as a board, then were debating what comes next. Our first focus, of course, was develop and benefit from the IP we had developed around chrome processing. So in 2018, 2019, we started looking seriously at diversifying into copper to actually then purely move across to copper. Really, that debate came to fruition in 2022, 2023, when the copper prices were around between $7,500 and $8,000 a ton. It's a whole different world, and now at $13,000 a ton. Of course, with that increase in copper prices, there's also cost pressures, because people will use this opportunity to also, chemicals associated with copper extraction. All of that gets pulled up because of the demand of copper going up. But it's a different world at $13,000 a ton, and it's very, very important for us to benefit or reap the benefits of this pricing to ensure that our operational expansion remains on track and we deliver the copper cathodes.
Yeah, I also, I suppose, what I see anyway, and maybe you can confirm this, is what Jubilee has done is it's moved from wafer thin chrome margins, because you were effectively only the processor.
Correct.
And an addition of PGMs, which we've seen platinum go up massively in the last few months. But at the end of the day, that was a byproduct of the chrome, and a very good one. But the reality of the situation is you've gone from margins of 3 to 5%, maybe being optimistic, to margins which are probably going to be 50% plus when you get the total production coming out of both Rowan and the copper. I always forget the name of the other place.
Yeah, no, you're fundamentally correct, Kevin. I mean, if you look at the South African business we sold, it was a processing entity. We acquired or partnered with resource owners and then processed their material to produce a chrome concentrate. And as you correctly state, out of that processing, we produced a byproduct, PGMs. It was the weakness in the business is the fact that you did not own your own resources. And you are correct. Chrome is wafer thin margins, especially now with the dollar weakness coming through, and therefore the South African rand being so strong. It really puts those margins under severe pressure. If you then step into Zambia or into our copper business, which we are today, where we actually own the resource. We have a business where we buy and upgrade material through our own concentrator, which is a stable business, a low risk, because it's simply purchasing other people's material. And that is complemented by 2 businesses. One, the mining Molefe side, where it's our resources we're mining. And the third, which is our waste rock project, as you accurately state, your margins are dramatically improved because you're processing your material. The margin is secured for yourself. Even if you look at what we announced late last year was the partnership with Galileo on the exploration side of that project. That partnership is limited to the resource. The actual processing facilities, upgrade facilities we are planning to build on site, the refining of that material is still fully owned and secured by Jubilee. So it is Molefe Mine basically selling its material across to Jubilee for processing, which just also happened to own the company that sells that material to our refining facility. So you're absolutely correct. The margin growth, the control of your margin is significantly improved.
With this whole metal situation in the world, where there is basically a scramble for these metals, whether precious, base metals, whatever, can you see a situation where in the next year or two that someone's going to come to you and say, I want all of your production at spot, and I'm willing to prepay 50% of it, or whatever it happens to be? It seems that the market is getting extremely tight, and we're only going to see higher copper prices. And it's not about the price; it's about the material ability to have the metal.
Quite correct, Kevin. At the moment, there is a scramble, and I'm very thankful that we were able to secure the properties we did at the time that we did. I think if we today, in this copper environment, attempted to secure further properties surrounding our Molefe mine, or even the Molefe mine itself, it would be a completely different pricing that is applied to the resources. And you are correct, there are a number of financing options being offered through the financing structure to secure access to metal, because it's that access to metal that is driving the people. Copper's fundamentals are very different to what is potentially driving the PGM price. The copper fundamentals is pure a demand that is outstripping supply, and the complexity and challenges of getting a supply increase in copper. So timing wise is good. And yeah, absolutely, I have no doubt that as our resources are being developed, as we bring out to the market the outcome of our drilling results, our resource reviews, it will attract attention, because this is no longer small assets. These are large assets that are being de-risked as we develop them, and because the mining side already produces. It's not something that is a pure greenfields exploration project. It already makes cathode, it makes revenue. And the waste rock project, which is at surface, is a very low capital project to get up and running.
All of those projects, it's hard to put a number on it, obviously, but all of those projects, including the waste rock, are we talking about more than 1 million, 2 million tons of contained copper that you now have access to?
Yes. It's a bit premature for us to at this stage talk about, because it's really the resources will come out. We have high hopes for the resource review coming out of the Molefe mine because of the sheer size of the property. The outcrops are visible on the properties we bought. As you fly over these properties, you physically can see the copper outcrops.
We saw it when we went. Anyway, we saw it when we were going down into that first dig, and hopefully when I come in February, we're going to see it again and see the development of it.
Yeah, very much so. So, there's a tremendous potential. You're looking at 260 million tons of surface rock. It contains a lot of copper, as this independent resource review will show. Equally, on a 25,000 hectares, even if 8,000 hectares proves not to be of any significant value, you're still sitting with an extremely large property surface filled with outcrop copper to support, which we have high hopes for, a significant amount of copper in that resource definition. As that'll come out during this year, we have a drilling program going. Our first focus has been the Molefe current area, which is the 400 hectare area, and that, as per our contract, is a 6-month period to complete that resource review. Another 4 months remaining for that to be completed, but we'll bring out the drill results as they come out. Equally, we'll immediately commence the aeromag flying of the larger areas. We call it the greater Molefe area. And those results will also come to market, so people can start seeing what is the likelihood of it being a very significant copper resource. And very importantly, it is a copper resource that is at surface or very near to surface. And
so
also,
I have sorry, go on then.
No, just maybe just a added component that sometimes is lost in what we are doing, because it really is only these 3 components that is our company. Also, if you were to compare us to a resource developing company on AIM, where we listed, we also are different, because we are on the one side fully operational, making our cathode. On our resource development side, we already have the sunken capital in a refinery that is making copper cathodes. So as we develop these resources, you're not looking at the capital numbers that traditionally are associated with bringing these resources into operation, because it's first of all at surface. Secondly, you have your refinery operating, and you simply are now filling or in that capacity of your existing refinery. So it's a very different capital structure to bring these into full operation.
So I'm going to ask a question as well. Obviously, 100% copper focused, and that's not going to change. But are any of these resources got, the odd gram of gold in or
Sure.
not?
Yeah, they are. The Molefe area does suggest to have gold contained in the resource. It's not a high quantity, but definitely a beautiful trace. It could be a very nice byproduct that is made alongside the copper, which is exciting.
And what are you planning to do with that then? That just becomes a concentrate on its own?
Oh, absolutely. You would recover it as a separate concentrate, yes.
Okay, very good. So, that's not in the equation at all in terms of what we've talked about.
No, not at all. Remember, the way gold is now, it takes a very little amount of gold to be profitable to recover that.
Yeah, absolutely. Listen, I'm looking forward to coming after Indaba with yourself to Zambia. So what are we going to go and see so people can have an idea? And then, obviously in a few weeks' time, we'll be able to report back for that.
Oh, absolutely, Kevin. I mean, the primary focus, first and foremost, will be to show you the greater Molefe, the operating site, how it's evolved since you last saw it, how it's become a really an operation that one can be proud of, and how it integrates into our refinery. And then we'll also pass by our Rowan facility, because at the time, which is just after Indaba, the concentrate processing area or drying area would be basically going very close into commissioning at Rowan. So it's a very good timing to come and see the operation running and at full tilt.
We'll see some copper in those cathodes, I presume, as we go through that.
Hopefully
very
lots.
Good. Yeah, hopefully lots and lots and lots. And I think you've got a great chance of blowing your targets out the water, as long as obviously the resource is coming through. But as it stands, what I see is we're looking at numbers of revenue now of 60, 70, 80 million dollars, and even just from the copper cathodes. And then subsequently, then you're going to have a huge margin on that. So that margin alone is going to be much more than the chrome ever was and the PGM.
Yeah, absolutely. I mean, you're on the chrome side, you always had high revenues because of the volume, but in copper, your revenue translates also to more significant earnings.
Yep. Okay. I look forward to following the story this year, and I'll see you in a few weeks, Leon, and good luck. And have a rest now, because I'm sure you've had a busy few days.
It's been busy, but it's been great. Thank you, Kevin. Really looking forward to hosting you on this side.
Okay, so let's have a look at some of the movers and shakers of the week. The best mover of the week is Bradda Head Lithium. BHL is the ticker, up some 113%. No real significant news. Again, it's another one of those. There's been a couple of the TR1s, but nothing of any real significance in the market in terms of RNS. But I guess these things happen, don't they? Sometimes out of the question, you get a bit of buying volume, and we see, we see an uptick of 113%. Another one, Kev, was Delta Gold, DGQ. Obviously, we've talked to Michael before. Up some 70.
One of my picks.
Yeah, 77% on again, no real news other than the OTC listing, which happened at the beginning of January there, didn't it? The previous week.
Yeah, I think it's just a very tightly held stock. And at the end of the day, people are looking at that, and you just have to do a comparison, a cross comparison to any of the quantum plays that are in the US. Yeah. And currently it's 25p, and it's worth about 15 million pounds, actually just less than 15 million pounds. Well, they're not sneezing for less than 150 million pounds in the US. And, there's one company that's worth over $1 billion, and most of them are worth, above $500 million. So just on speculation, just on what's going to go on, I think it's got miles to run, to be honest with you. And I think there is going to be news in this first quarter. They haven't come to the market, and, they're just going to put out the news that they already had, which was the Toronto University stuff. So I'm expecting fireworks, to be honest. It's very tightly held. And if you want a piece of it, you're going to have to pay for it.
Oracle Power, ORCP. Oracle Power is up some 60% as well on the week. Again, not no real significant news I could see. Smarter Web Company up 42.5%. Obviously, on the news that the news they would announcing they're going to move to the main market. I think that was AGM. Conroy Gold up 25% as well. I saw that on Friday. That was nice to see them moving up. Just add a little bit on Conroy, Kev, because again we've talked about them for many a year now.
Yeah, well, Conroy, based on the current market cap, I think is around £8-9 million. I think it is something in that order. At 15p. I mean, let's be honest. It was valued at 2-3 times this amount. Never mind the share price in the past, just on anticipation. Now this time they've raised money and they're now going to drill, and they're going to drill to depth in Clontribbit. Clontribbit already has 512 ounces of JORC report. 512 ounces of JORC report. Let that sink in. How much is that worth? Just that. Now, I think it's going to be 1 million ounces plus, no problem whatsoever in Clontribbit. I mean, we visited it twice. We know what it's like. If it goes to depth, you are talking about a huge resource. So I can easily see the share price doubling on the fact that the results come out, and even before the results, the anticipation of the results. I think it's going to be a big mover this year. I really do.
Good. Okay, coin as well. Coincilium up 25%. Again, obviously Bitcoin moved up, didn't it? Quite a lot on Friday. So quite a few of the sort of Bitcoin play, not just pure, obviously Bitcoin play, but some of the stocks like the Smarter Web, London Bitcoin Company, Coin also moved up as well. So that was really good to see.
I was speaking with Malcolm during the week, just briefly. I think most of them are still MNAV under 1. So you're buying assets of less than the value of the Bitcoin that they hold. And you're going to be in a situation, certainly with Coin, where you've got yellow coming on board, we don't really know what the valuation of that's going to be, but I would hasten to add that I think it's going to be fairly significant. So yeah, and look, if you've got a problem with fiat currency, which is basically what's happening in the world, there are probably 4 lots of assets you can buy. You can buy the precious metals, you can buy physical assets, as in land or buildings, or you can buy crypto. Bitcoin being the main daddy, if you like, of crypto. So I think it's going to go on a hell of a run, to be honest with you. I really do. I think we're going to see a big run in Bitcoin, because people see it as a flight to safety. I'm not necessarily saying it is, because for me, I'd rather have the gold and silver. But from the Bitcoin point of view, I think it's going, and I think it's going to keep going.
Yeah,
I think we're going to see all-time highs within the next few months.
Yeah, absolutely. And I think that, well, we've certainly seen all-time highs bust through more or less every week, haven't we, on the likes of silver and gold? I mean, silver particularly, busting through the $90. Gold punched through the sort of round, was it probably about 46.50, maybe even 47, probably even touched 4,700 briefly at the last week. It finished around the 45.90 mark. Bitcoin at 95,000 as well. So all looking good, and we'll talk a little bit more about the metals in a minute. The other notable RNSs of the week, and this is a really interesting story. The market has kind of picked up on it. This stock was up about 34% on the news, but I don't know if you saw it was Makengo Resources it's a real top pick from the RNSs that I saw last week. Strategic news, not just another sort of drill update from them, but it's the launch of the UK's first commercial rare earth magnet facility in 25 years, which ties directly into industrial policy, supply chain security, China risk, EVs, defence and recycling. Obviously, it's tangible, operational and politically relevant, with ministers turning up and real capacity numbers to discuss. So is this finally how the West rebuilds rare earth independence? Does magnet manufacturing matter more than mining, and valuation disconnect versus strategic importance? I thought that was a really, really good RNS. I don't know if you saw that. Well, I certainly included it in the hot list in the mornings, but
I did see it, but I didn't take much significance from it. Yeah, I mean, You could well be right. I mean, at the end of the day, when you look at the silver market, the Chinese have basically just shut the door on 65% of the world's production. It doesn't mean they actually have the silver, but everybody smelts the silver or 65% of the world smelts the silver in China. So if they suddenly say, no, we're not exporting any of this, what happens? The world goes down to 35%. And some of these prices you're talking about with silver, I think there are absolutely catastrophic shorts on silver in some of these banks. No idea which banks they are. Everyone's talking about Citibank is one of the big ones, but I mean, you just don't know, do you? Because half of it's AI generated. What do you believe is the reality? But the market's telling you by the stress and by the amount of premium that's going on to physical silver, that, this is the case.
Yeah.
What's going to happen if China say, okay, we're now going to limit exports of gold?
Yeah.
The same thing's going to happen.
Yeah.
Though they don't have as big a control over this. The other thing that happened this week that I think a lot of people missed was the announcement of the unit, which is the new BRICS currency.
Yeah.
And effectively, it's going to be made up of 50% gold, and then 10%, 10%, 10% of the yuan, the rupee, the Russian, the ruble, the South African rand, and the Brazilian peso, I think it is.
Yeah.
Those 5 currencies are gonna sit in this basket, and any of the other BRICS nations that effectively want to trade are going to be trading a gold-backed security, which will be balanced around those 5 currencies and gold. Oh dear. All of a sudden, our fiat currencies that we have, which aren't backed by diddly squat, are all of a sudden, which one would you want to hold?
What, out of all the different ones you mentioned, like the Brazil, the Russian?
No, you hold a basket of them with gold.
Oh, okay, yeah.
But the unit is what I'm saying is, would you rather have the unit that's backed up by gold, or would you rather have the US dollar, which is backed by a promise?
No, there's no contest, is there? You'd have the unit, wouldn't you? You'd have the backed by gold. As you say, that the whole fiat currency, as you say, the promise is done.
Yeah, and what we're seeing now is, I think, it happened again, I think it was this week, that the biggest asset held by central banks is now gold, and not T-bills or not US dollar bills, or bonds, which is the first time in decades that this has been the case, probably 50 years or more since we came out of Bretton Woods in 71, I think it was. So these are momentous times. The world is changing, and you've seen it in the small caps as well, haven't you? You've seen it even in the stuff we're talking about. You got to look at Extract's gone up this week. You got to look at AJAX Resources has gone up this week. What else has moved in terms of the resource space? But all of these are because people are also thinking to themselves, they've got great opportunities, but the physical asset that they hold is gold, is silver, is copper. And that's one of the reasons why I think Jubilee is going to do very, very well as well, is because in this environment, I think copper is just going to keep going up.
Yeah, good. Ethereum as well. Did you see that? The positive geophysical results of the Kalahari Copper Belt? That was a really good RNS as well.
That's one of those ones that is absolutely ignored, hated. Yeah. It's not hated. It's just ignored.
Not hated. It's just I don't know what it is. But I've actually got a meal with the guys on Wednesday in the city, which I'm looking forward to, because I want to sit down with Charles and Simon and just understand. You know what I mean? Like, not get more info. Well, just drill them and just ask them a bit more about the Botswana, about the Kalahari, what's going on in Morocco. I do feel it's one that is massively undervalued. The Rwandan trading arm. All the things we've talked about. We visited the comptoir. They're selling it onto market. They've got the off takes. It just feels like the market just doesn't totally understand it.
The trading arm, from my conversations I've had with Charles, is really starting to motor. Their biggest problem is that they can't get enough cash to make it happen, fast enough. But that's a good problem to have, because as you start sorting that problem out, you're going to make more and more and more money. So I think the finances of that company are going to look fantastic. You've got the deal now with the operation in Paris anyway, which was basically going to look at all their assets in Morocco and Botswana, completely funded by the company, which is a big company that is private company that is effectively connected in some way with Tether, just like Altus Minerals, Altus, it's not Minerals anymore, I think. Altus, who basically are a big shareholder also of Ethereum, and they are 50% owned by Tether. Billions and billions of pounds of gold and currency-backed coins that they're trying to create. So I think there's some exciting times ahead for that. I really do.
Okay. Any others you want to talk about?
Yeah, I want to talk about what happened at HAMAC.
Okay.
It was HAMAC Gold. It's HAMAC something else. I think it's HAMAC Strategies now. CEO's basically fallen on his sword. I think there's going to be some big changes there. But I really like the crypto gold play that's going on there. And they've got gold assets. They're trying to produce the gold, and then they've also got a crypto treasury as well. I think those gold assets are going to be very good. I had a chat with Mike, who's one of the guys who's basically, I think he created HAMA in the first place, during the week. So we're hoping to get them on at some point. But I really like it. I think it's going to do very well because of the resource thing. And I've been looking for a play that is resource and the Bitcoin together. And I think it could work very well.
Very good.
I like the 3 A's, and my 3 A's at the minute are AJAX Resources. I think it's got massive upside potential. I think Ipolato is, strategically in the right place at the right time with the right assets, and I think that could do very, very well. The next one we had on today as well, which is Active Energy. Right time, right place, right situation with the AI centers and providing them the electricity, and also potential for creating Bitcoin at a much lower price than Bitcoin is, even just from a profit point of view. The final one is Astrid. We interviewed those guys at Astrid and Bit and Saw. I've seen Charles talk about it. It's really the growth part of the crypto market. Bit and Saw with the subnets and the fact that they're going to own the nuts and bolts, if you like, or the shovels and picks and all the rest of the stuff that goes around the infrastructure of that network. I'm super positive that is going to do incredibly well. It's obviously got its own subnet 127. Very, very interested. So they're the 3 A's that I'm looking at the minute. AJAX, Active Energy, and Astrid.
Very good. Okay, moving on to some sport. We've obviously United beat City at home. I never thought I'd say that, but 2-0 as well, and then they had a goal disallowed at the end as well. So, yeah, I mean, how does that set you? Obviously, it sets you guys up full time. You drew though with Burnley, Kev.
We just finished watching it because we're recording this on Saturday evening now. This time, I just finished watching it. We absolutely destroyed them. We missed a penalty. We had chance after chance. We had something like 10 shots on target, 27 shots altogether. How many shots did Burnley have on target?
Don't know.
One. How many goals did Burnley score? One.
So you could argue they've got a
good goal.
Great score rate.
Yeah, can't take it away from them. It was a good goal, but
yeah,
we were just
it happens, mate. So the big one is obviously Forest against Arsenal at 5:30, which is literally kicking off now. But yeah, I mean, so we've really done you a favour, and obviously you're hoping that Forest can get a result as well today because that will set you up pretty well. But yeah, I mean, looking at the result, looking at the tables now as it stands,
I don't know. You're only 3 points behind.
No, 1 point behind you.
Is that right?
Oh, yeah, sorry, I was looking at it. You're 36, we're 35. Arsenal are 50. So City, obviously, we've pulled 3 points off them today. They've dropped their 43. So Arsenal's still got 7-point lead, but they need a win today, of course, against Forest. But yeah, it's all interesting, isn't it?
So do you think this is a flash in the pan, or do you think Carrick's actually going to have a good impact?
I really hope that it's just an anomaly, isn't it? I think let's be positive and hope that he's going to have a good impact on the players.
Yeah, I think there's an issue that Amarin had them playing the way they didn't want to play, and the reality is, I think if Carrick gives them a bit more freedom, I think you could win more games, but you could also be losing some as well. But we'll see.
Okay,
we shall see.
We've gone on long enough this week. It's been a star-studded show, and I think we just say we'll wrap up there. If you do like what you've heard, please subscribe, hit the bell icon for further notifications of future episodes, and have a great weekend all.
Indeed. Enjoy.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.